perceptive and non-robotic co-hosts. And joining us for the hour, Lloyd Financial Group President and CEO, Lloyd.
Hey, guys.
Show, Luke.
Always
Get
fun
ready.
to be here.
Buckle up, my friend.
Rock and roll.
All right, Walmart posting strong sales growth and raising its full-year outlook, although a profit miss is dragging the stock down today. The retailer says consumer spending remains strong, but shoppers are looking for discounts, and Walmart has managed to keep prices low. The results are consistent with retail results earlier this week. Lowe's, TJX, and Home Depot all seeing strong sales, but the job market is a question mark. Jobless claims rising more than expected this week. So the question remains, could we see a rate cut in September? But I want to talk about Walmart earnings first, Luke, and I want to hear what you think about what it means about the consumer, what it means for the economy.
Well, I think the key point that they cited there is the consumers remaining strong. I mean, that's the most important part there. And from an investment allocation standpoint, I think you want to actually own the products within these retailers. I actually would not own the retailers themselves because they actually do have to maybe price in this if we do get a rise in inflation. Let's say tariffs do impact. We have not really seen tariffs really impact the economy at all recently. That might be coming down the future, but they actually have to absorb some of that impact. So they're still going to buy the products from a wholesale kind of mentality from like the Campbell Soups of the world, the Kimberly-Clarks, and the Coca-Colas. So my clients own 3 of those stocks, and a lot of the clients I've been onboarding recently that own these big tech stocks, we're transitioning these clients into a lot of these more dividend-paying names and kind of more kind of staple names that I think are going to continue to do well with the consumer still remaining pretty strong, not having to worry about adjusting the prices from a retail perspective.
So that's interesting, Jackie. I'm reading some of what Walmart had to say about their results. They say about a third of their products come from overseas. They've raised prices on about 10% of those goods. They're absorbing the rest of the elevated cost, and they say they're playing offense, which is, I think, probably the right thing to do in a competitive environment where Target, for example, on the other side of this really struggled this week in their earnings.
Yeah, and the stock is trading down today because they missed with respect to expectations on their profits. So some of this is eating into how well they're doing. We're optimistic about what their guidance is, and they're saying that they're going to help the consumer and that tariffs aren't going to be a huge issue.
They're saying that?
Well, they didn't say exactly like that. There's upbeat future. There's upbeat in the future.
They raise their
is
guidance.
What I'm seeing from Walmart. But I'm not so sure that investors or I believe that. And so that's why I think the stock is trading down today. So I think you have to take some of these reports with a little bit of a grain of salt.
So Target take them out because I think they have a brand problem because of DEI. So, I mean, and they're going to have, they have a struggle.
Yeah, I agree with that.
They're going to be impacted by tariffs. I do know this because I spoke with senior people at Walmart. They did warn the Trump administration that they're going to eat the tariffs for a while.
Right.
But there's going to come a point
And they can't.
when they can't. That point, I don't know when that is. I mean, I guess when there's real clarity. We still don't know all the tariffs, right? I mean, isn't it kind of like...
It's not going to be hammered out.
I mean,
till
how many are on
October,
hold?
they say.
I can't keep track how many are on hold and how many aren't. Okay, so when we get clarity on that is when, and again, I always say this, we won't know the impact of tariffs for about another 6 months, I think. And then that's when to really judge Walmart. But, you know, when Walmart says, oh, you know, we're playing to win and all this sort of rosy scenario, you got to take it with a grain of salt. I mean, what are they going to say? We're here to lose? I mean, you know, I mean,
I think that the tariff conversation, we don't know exactly what's going to happen 3 months, 6 months down the road. What happens if we pull back tariffs? These are all things we need to consider. So my frustration with a lot of these companies is they're so quick to blame tariffs and say, this is the core problem, or we're kind of concerned about this in the future. They may have other problems on the side, but that's the easiest scapegoat right now. That's kind of irritating.
It's the most obvious if you're being taxed, right? Tariff is a tax. If someone says, I'm going to tax you, you say, well, here's the impact.
Dagan.
It is a tax. That's why the Federal Reserve shouldn't be taking it into account, because it's not inflationary. That being said, if you do the math on that, so 10%, a third of its goods come from overseas. Brian just read this. The company's raising prices on 10% of the goods that it imports. That is 3.3% of all of its merchandise. Say it like that, 3%. But instead, the media is driving into the brains of all consumers Tariffs push prices higher. Tariffs push prices higher. Tariffs push prices higher. Again, that embeds in the psychology of it turns tariffs temporarily into something that's inflationary, or it hurts demand because of the messaging about what all of this means.
Although tariffs can be inflationary, right?
No, they're not inflationary.
They can be. They're a price shock.
It's a one-time.
I agree
It's not a
more with
price
Reagan. I
shock.
don't
It's a
think
price
that
shock because it's one time.
I think it's more disinflationary.
It's only a shock if literally every good is increased in price
Which
all
is
at
what
one
happened.
time. No, it's not happening.
Well,
No,
they're
3%.
throttling some of it now.
No, 3.3% of the goods at Walmart got a price increase.
Right.
That's not a shock.
But when you tell corporate America all your prices are going up, that's a price shock.
That's not what they
That's not what
said.
they're saying.
Nobody's saying
97%
that.
of our prices are.
No,
not
when the
going.
federal government says we're gonna tax all your products or most of your products,
It's not all your products.
What are you talking
it's
about?
90% of them. I mean, what do you,
Charlie, 85% of our economy is domestic.
Domestic.
Really? So Walmart,
It's not imported.
Walmart
not
doesn't
imported.
import a lot of stuff from
They
China.
import
third
30% and 10% of it's.
Okay,
Okay.
And all-
30% is not a lot.
That's what they're saying.
That's not a lot. That's a big part
I know,
of
but
your
you're saying
business.
all the prices.
You don't have
Inflation
it.
is
You
a
don't have it.
I'm talking to them.
You don't have your listening ears on. They
Well, with all
their
due- with all-
imports. Their imports are 30%
okay.
of all the
Okay,
goods they sell,
okay,
and they're
so-
not just from China.
Okay, so the world is an integrated economy, right? We import and export stuff all the time. Retailers like Walmart import plenty of stuff from overseas where prices have increased.
Yeah, but Charlie, okay.
And that's
yes,
not a price shock.
Yes, but we're giving you the actual
No, it's
numbers.
not a
We're
price shock.
saying
It is a
plenty.
price shock.
No.
We're not giving me actual
It's
numbers.
not
You're
a
telling
price
me
shock.
30%.
I just told you.
We just
Walmart-
told you
30% of
Okay.
what?
3% are prices
So wait
going
a
up.
second.
3% of all the goods they sell, they've raised
3%?
prices on. That's yes.
So the tariffs only hit 3%?
That's
They-
the key. Is these
they ate
retailers-
everything else.
these
Now
retailers
they
are
did.
absorbing the cost.
And then they miss their profit.
Yeah.
That is what
I mean, what are you
concerns
talking
me.
about? They missed their profit.
Okay, by the
eating
way, hey,
tariffs.
can we just add a
No,
layer
that's
on this?
actually
They
no.
missed their profit.
You know why they missed their profit? Did you read the release?
Did you?
Yes.
Why did they miss? Why did they say they missed their price? Profit?
Because they
Do what
had
they said.
problems
Thank you.
with
Say it.
settlements.
Thank you.
They had to settle customer and employee injuries in their stores.
So injuries caused them to miss their profits.
Yes.
And actually, Charlie, you just said
That's
you talked to the
absurd.
go call the Walmart
I
executive.
did.
and
I
ask
talk to them all
about
the
it.
time. They have to raise
we can
prices because of
simplify it.
tariffs.
450.
Okay.
Wait a minute.
I mean, come on.
$450
That's
million
true.
dollars
Yes.
was from settlements over
They
customer
are-
and employee
Listen,
injuries.
I don't know
Okay,
where
now-
you guys get your information from, but I called them up. They tell me that they are eating it for now, and they're going to raise
Yeah,
later.
you called Walmart this morning.
Last week I called them.
Yeah,
You
well,
want, you
the
want to be on?
earnings
You
came
want to be
out
on the
today.
phone with me?
Okay,
By
the
the way, there's
earnings
a
came
former
out
Bush
today.
administration official that works with the press that he'll talk to you about this.
Formulate your next thought, Luke. I'm coming back to you on this. I want to bring a couple of names into this because I said Walmart's on the offense. Maybe that's a throwaway phrase, but I think what they're seeing, and you can like this or not like this, and Amazon's seeing the same thing. This is a moment for them to pick up market share and win customers because they're probably in a better spot to deal with all of this than some of their competitors. That's the point about them seeing an opportunity.
Well, and I talk about this a lot. This is the problem with the getting bigger corporations. They can't absorb some of the shocks that we were talking about there. And the Amazons of the world, when you're more online, I mean, look, I can't tell you how many times I come home, my wife has a new package from Amazon. It absolutely is a way for them to catch up. When it comes to the inflationary aspects, whether or not the kind of conversation, I think you have to look at CPI. When I see CPI, Charlie, 50% of it coming not from services and actually coming from other areas that may be more tariffs, that's when I'm more concerned. But when 76% of CPI is coming from
point.
services, that's not inflationary because the services are coming domestically. So that is what I'm paying attention to.
What did you make of the PPI number?
I thought that came in a little hotter because that maybe we might see that
That's
reflected in
the problem.
CPI down the road. But we'll adjust that for clients and portfolios
Right.
in my mind when those
Can
CPI
I
is
just add one
reflected.
thing?
Please.
I was impressed by this, and it was sort of buried under the headlines. I believe it was last week or the week before. Sorry that I don't know exactly. But it was Amazon. If you're a Prime customer, now you can get free delivery without a minimum. which I used to not order groceries because you had the $100 minimum, and I'm one person, I don't always have $100 worth of stuff to order, and I don't want to pay whatever, the delivery fee. Walmart Plus, if you are a member, does give you free delivery. I thought that was interesting because it's just this competition is getting hotter and hotter and hotter between these two. They both want to be the #1 direct-to-consumer, direct-to-your-door, and as they have to compete with each other and find more innovative ways to do it, they're going to be cutting into their profits too at a time where lawsuits and tariffs will be an issue for them. So this race between them and the competitive environment, I think, is what we need to focus on moving forward.
Exactly.
Also.
I think that's a great point. Watch this. We're going to move on. Jackie, you're looking at Meta. What's going on?
Wall Street Journal reporting that Meta just froze hiring in its artificial intelligence unit. It comes after that massive hiring spree that Zuckerberg was using to build his superintelligence team. Meta says this is a part of the broader restructuring of the AI teams into 4 different groups: superintelligence products, infrastructure, and long-term exploration projects. We've seen, what are we? Today's Thursday, so we've seen 4 days of kind of selling in this market with tech stocks being a little bit beaten up, but Meta is down $12.
Luke, really quickly, is this kind of like part of that bubble AI story, or is this just
when
Meta kind of consolidating?
When you have 76% of the market cap weighting made up by top 10% companies, this is the rotation I've been kind of wanting for a while, and I've been kind of talking about. And I think I was kind of early on that conversation, but I think that market rotation is happening into a lot of these dividend-paying names because people want that current cash flow. And if the perception is rates are going lower, which is a call option with that dividends, with those dividend payments.
Jackie is very on to that because Merck, big dividend payer, and she's hoping that Palantir in the next week collapses in on itself.
NVIDIA reports next week.
Continues to grow.
Right.
NVIDIA's down too. I'm just saying.
By the way, where are we going to get all the electricity for all this stuff?
Yep, that's
There's
a
Chipotle.
very good question.
There's actually a
An
yep.
ongoing conversation. Okay.
Welcome back. The Trump administration expanding its use of AI through a new partnership with Google. Grady Trimble at the White House with the details for us. Hey, Grady.
Hey, Jackie, and it sounds like a pretty good deal for the federal government. Each government agency will get access to Google's Gemini as well as a whole suite of AI tools for 47 cents per agency for the first year. That 47, not a coincidence. It's in honor of the 47th president of the United States. And this announcement builds upon previous agreements with OpenAI and Anthropic for similarly low prices. The General Services Administration, which supports all of the federal government, 60 agencies, says at first government agencies will use AI for simple tasks like help with research and speech writing, then expand uses to more complicated use cases from there. The head of Google's public sector business gave us an example of how AI agents can help reduce wait times in call centers.
A veteran calls a helpline to schedule an appointment. An agent can help that veteran understand exactly what department he needs to be scheduling with, can make the appointment, can make sure that the doctors are alerted to his past or existing conditions.
GSA says all of these AI deals are aimed at making the human workforce at the federal government more efficient, not replacing those humans.
That human overlay is still integral to the process. So where I see that we're up to in this AI race is, at the moment, we are really just turbocharging and leveling up the human workforce.
And GSA says it expects all 60 government agencies that it supports to use AI in some way, maybe simply to start with more complexity as they learn how to use it. One of the advantages for Google, Jackie, is that, as you know, the more people who use this technology, the better it gets. So they see an opportunity to help improve it with all of these thousands of federal employees using their AI products.
Well, that makes a lot of sense. Grady Trimble, thank you for that. Meanwhile, we're seeing a big sell-off in tech and chip stocks the last few days, as I mentioned before, putting the markets sharply in the red this week. This is fueling fears of an AI bubble. Several big CEOs have been warning that AI is overvalued and could be due for correction. Sam Altman was one of them. Also, though, I just point out that we're coming off of records for the stock market. These this whole list right here of stocks has really run substantially high. I personally am not surprised to see a little bit of a pullback in some of these names, Luke, because I could imagine that investors would want to take some profits here. I'm not necessarily sure that it has to do with an AI bubble per se, but wondering what you think.
Well, let's use Palantir as a direct example. I mean, I'm not calling this is another tech bubble. But when you have stocks trading at 100, 110 times price to sales ratios, I mean, that's a flashing, not yellow light, that's a flashing red light. So yes, there has to be some money coming out of these names. It has to rotate somewhere else. And when it comes to like the AI side of things with the government contracts, when you live in a economy that's kind of controlled and dictated by the government because they deficit spend $2 trillion, then any kind of way these tech companies can get close to the government's a good thing. So let's use Google as an example. Once they get ingrained, they're going to sign multi-billion-dollar contracts probably with the U.S. government. Can you imagine if we had AI run the entire government instead of employees, and all those employees went to the private markets? There's so much growth in the private side if we ever got to that point, and that could fuel so much growth and so much money to the stock market down the road eventually. So yes, there's this huge transition going on. Some of these names are up a little bit higher. We just bought Accenture, which is a consulting firm, and talking about Google contract, they're going to go in there and call the consultants to implement this stuff. So there's these ancillary areas that have been kind of unloved that need to catch up.
You're touching on something that I think is really important, which is that we haven't seen the scope and the breadth of what AI can be just yet. And so for those who have said we're in the early innings, I think that's probably still true. At the same time, some companies have been sold off because of their AI spend and their plans on how they're going to grow their AI faction of their business, maybe leading investors to believe that it's moving too fast or it's not moving in pace with how the technology is moving. And so I'm wondering if that, Charlie, is more of what's happening as opposed to, it's a bubble and, somebody picked it with a print.
I mean, it's hard to put your finger on one thing. Is always, it's a matrix, right? It's the mosaic theory at work here. I would say there is an emerging short thesis. I've been reporting that. I'm going to report this in the Post tomorrow, particularly on NVIDIA, which is kind of the standard bearer for a lot of this stuff. So there's an emerging short thesis on AI. We should also point out that when you're comparing stuff to the tech bubble, as someone who covered it and wrote books about it, I mean, those were most of those were companies that weren't really companies. I mean, these are real companies. Google obviously is a real company. OpenAI is a real company. That said, this short thesis is emerging, and people are starting to listen to it. And part of the short thesis involves energy. Do we have the energy capacity? And because if you look at the charts, clearly the lines are starting to diverge, like usage, energy. And if we don't, I know Trump administration has been talking a good game about nuclear power. Yeah. I don't think we're building that many or any, I don't know. China, by the way, is building nuclear reactors. We're going to need to find alternative energy sources to power probably the sort of infrastructure we have now if you map it out in the future. Now, the growth it could be exponential. You're going to even find more. Now, good thing is we have an administration that is pro-energy, probably pro-nuclear. I mean, they talk a good game. They have to do it. It's not that easy.
I think you can play the direct energy side right now. Instead of the future of nuclear, which I am bullish on,
right.
I think you can play the natural gas and oil companies.
Well, play that off this. But that's the short term.
You're touching on a disconnect, though, and I think that's really important.
Well, the short-term play. You're a trader.
Yep.
Would you be buying or selling?
Buying natural gas and oil.
No, would you be buying or selling the tech stuff?
No, I've had clients come on the past couple of weeks that were 20% weighted in Palantir and NVIDIA because they rode the wave. We sold all of it. We created a capital gain. We probably have some tax loss harvesting at the end of the year, but that's what I'm doing. For 3 months now, I have not owned any of these big tech names, and I'm very comfortable sleeping at night knowing that.
Now, remember, Amazon during the tech bubble went as low as $8 a share. Now, there's been splits and all that, but it hit almost rock bottom, and it still had. And what it was doing, it was investing in infrastructure and the changing business model. So remember, just because
Amazon was the one with the huge AI spend that I was referring to.
But just remember, just because the next year, I mean, I think this could last a year if you believe the shorts. I'm not saying I do. A year could be rough, but that doesn't mean we're going through the implosion or NASDAQ style bubble of 2000.
Brian, when you see the board, are you glad that you didn't buy big tech and you bought Chipotle?
I thought it was interesting that Luke said Palantir was a really risky thing to be in, and I just want to emphasize that.
Are you in it?
Well, no, from our little competition here, I'm in Chipotle, which has not been great. Not a
And
great
we've got
AI
about
play.
10 days left, so
I
let's
just-
see the fat lady
I've
say
been keeping you afloat.
Thank you, Luke, on that. Just real quickly, I agree with Chris Verone. He said something the other day on this show that I think is important. There is going to be a shakeout in AI. I like the bubble analogy less than just a funnel filter. You are pouring a lot into a funnel filter right now. What comes out the other side is going to be different, and it's going to be, it's not going to be what you pour in. We're pouring in a lot right now. That's how you discover the future. So
Creative destruction.
I don't know that we're at it right now, but it's going to happen with any big
So
technology.
who survives, you think?
It's the same dynamic that you had with the internet bubble.
So you think Google buys it all?
I mean, I know who's going to buy it all. That's what we're going to find out when the shakeout.
I mean, Qualcomm's another one. It's unloved, but that's another name that's going to fit right in all the things we're talking about, but it's been unloved. I think these other areas are where you want to rotate money in. Like, it just makes sense. They don't have the extreme valuations.
Well, I walked through the investment, the percentage investment in AI data centers versus the telecom infrastructure from 99, 2000. And right now, it's 1.2% of GDP into data centers, which works out to be about over $300 billion. It was only 1% of GDP in the telecom infrastructure in 2000. The telecom infrastructure was lasting, that even if you didn't use it at the time, it was still in place. But that's not the case with data center infrastructure.
What about the highways?
It only lasts 3 years.
What about the highways of
So-
like AI, like AT&T and Verizon? Those are kind of interesting things to think about too.
Right, but the major cost of the AI data spin is the GPUs, and that they have a 3-year utility. That is it.
Yep.
And so that, like with the telecom, that made it even harder for that bubble to burst. This bubble, it's not just there are only 4 players where the money makes any sense, where they're actually doing something. It's OpenAI, Microsoft, Google, and Anthropic. But there is billions upon billions of VC money that is going into companies that we don't know if they're viable or not. So we don't see them because they're not public. We don't see them as easily.
I get pitched them every day.
Right, those companies could
To do stories on them.
oof.
All right, we're going to have to put a pin in it. Sorry. After the break, we're going to...
New census data out showing people 55 and older are the fastest growing group of renters. Jerry Willis joins us now with that story. Hey, Jerry.
Hey, Dagan, that's right. More and more homeowners approaching retirement are choosing to sell and then rent. These aren't folks who can't afford the mortgage. It's people who are eager to sell when demand is sky high and they can lock in piles of equity they've been building for years. In fact, the share of renters 65 years and older is up 30% in the last decade. That's according to Point to Homes. And the trend has expanded well beyond white-hot real estate markets on the coasts. Listen.
What we're seeing is a lot of people, as we're talking 55 plus, have raised their kids in great neighborhoods. They've seen their equity build. So people that are no longer using the school districts, that no longer are commuting into the city every day, don't really need to stay in the house that they're currently in.
It's not just the high cost of maintaining a home at issue. There's the taxes. When Tina and Todd Olson saw New Jersey politicians expand a millionaire tax on home sales, well, they decided now was the time to cash out of their home.
If you would have asked me that 3 years ago, I would have said no. But again, with the timing of this, we said we didn't know what we wanted to do yet, but we knew it was a really good time to sell.
Doing some traveling and not having the burden of worrying about your home, we just lock the door and we leave, and there's really nothing for us to worry.
Of course, there can be downsides. For example, you want guarantees your rent won't skyrocket. And like any renter, you want to make sure your neighbors aren't cranking metal at midnight. But the big upside is overcoming the big downside of real estate investment. It's illiquidity. By renting, even for a short period, sellers can unlock their equity and plan their next steps without worrying what's next for the market or interest rates. Dagan?
Thank you so much, Jerry.
Can I add to that?
Yeah.
I also think that skyrocketing carrying costs are saying to people, do I want to carry this home? My kids are gone. I've got the big home with the equity in it. Insurance rates, maintenance rates, gardeners, electricity rates, heating rates, all of these things are just making it more expensive to carry these homes. And people are saying, why should I do it?
It's property taxes. I mean, that's why
Taxes.
Florida is doing did away with property tax, trying to. Ohio, Vivek Ramaswamy is really pushing for this governor kind of bid there. All things you want to think about. I have farming clients that have to sell acres of land to foot the bill for their property taxes because they only farm a portion of it. They don't have enough revenue to come. I mean, our founding fathers would be rolling in their graves if they saw America on that side of things. And when it comes to home ownership for the younger generations, I bought my home at 23 years old. I sold it last year, all right? I don't think I'll ever own a home again. I don't want to care if the sump pump's running or not when it rains. It's just it's a lot of stress and things don't talk about. It's like the dream is changing, the freedom from side of the
When you rent, you just call the landlord and say, the toilet's broken, come fix it. And they pay someone to come fix it.
But do you want to own an apartment, though?
Condo, maybe.
Right.
That's what you want to look into.
So it's really my question is about ownership versus renting. And if you're already retired, but you brought up Florida. Well, I think you're the oldest person here.
Freudian.
No, you're the oldest person here.
Or not so Freudian, just pointing at you because you're the oldest.
Because I haven't spoken yet. Florida is a terrible place, even if you own a condo right now, because of just the general cost and the building maintenance.
And the insurance.
Coming down, isn't it coming down?
To buy, prices have come down. There's a massive amount of inventory on the market. But if you have to have any work done to your building, for example, it is an extended wait and the costs are insane.
Let me ask you, I'm not from Florida. You're down there. How do they cut property taxes when they have no income tax?
Their government spends it's a fraction.
I mean,
of what New York State spends.
If Ron DeSantis could do that, he should be president. I don't care. No, very low. No, it's not. He runs a state with a surplus that has very low property taxes, no income tax. That's why Florida's a place to be.
We'll see what happens when the housing market down there actually.
Right.
Yeah.
Because the price is inflated so much during COVID and the migration. I also think that's a little bit of it's the cost, definitely, for sure. But that's part of what you're seeing. But then people are saying if Mamdani comes in here, that there's going to be more of a mass migration, so the pricing may pick up again.
Sell Kami Mandami, buy
Florida.
I'm trying to think something about DeSantis.
Or rent Florida if you're retired.
Besides the government, real estate's one of the biggest Ponzi schemes. When it comes to spending and people in the economy and such. I'm concerned, again, when it comes to younger generations, I'm not concerned next 10 years. I think you're still going to see it keep up with inflation. But I do believe that in the long term, younger people aren't getting married, not having kids. And if you have less immigration, whether it's legal or illegal, and you have less population growth in America, which we might actually see it, decrease negative down the road, that's going to cause an issue for real estate. So I am concerned about residential real estate. 65% of middle class money right now is in their house. I wouldn't be surprised 30, 40 years down the road, it's going to be a lot less because it's not going to keep up with inflation because of not enough people.
I don't know.
Yeah.
I think that if you have a dip in prices,
It's nice to own something. I mean, really own it, right? I mean, you got a place it's yours.
I have to tell you, here, my friends are complaining about rents continuing to just go sky high every single time
this is ridiculous.
Their lease comes up. And so that's why he's seized on this affordability crisis issue. But so if you were, able to buy something when mortgage rates were low, you know what your bottom line cost is going to be, and it's not going to increase as that happens. And that provides a lot of people with a sense of security.
It's true. Can I agree with Charlie on one thing today?
Don't.
I think there's something very important about having to care for things in life. And having a home gives you something to care for. And I think that's a character issue.
And let's face it, it's an asset when you're getting old. You know what I'm saying? No one could throw you if you own it.
Well, that's why these guys can rent, because they're going to have huge equity and they're going to be able to cash in.
If you rent and then, and your landlord jacks your
not a good feeling.
Rent, not by consumer price index, but by 20% because they can, it's egregious.
No good.
Tuning into The Bottom Line, you better. I'll have Chip Roy, Eric Schmidt, the senator, Chip Roy, the congressman, and Steve Moore, 6 p.m., Fox Business, right here. That's Eastern. Coming up, why one business is refusing to open stores in California and what that says, well, not about politics, it's about reality. Stay with us on Big Money.
We've made the decision to not open in the state of California. And while it was a big place for business in the past for Bed Bath & Beyond, it's just too cost prohibitive to do it. And at some point, some business needs to take a stand and remind the state of California that while they keep reminding us that they're the 4th largest economy in the world, that's going to dissipate over time.
That was Bed Bath & Beyond Executive Chairman Marcos Lemonis on this show yesterday. Lemonis insists he's working on a California strategy, which will include same-day delivery. For now, California residents will be able to order online, but they will not go into one of these upcoming stores, Bed Bath & Beyond stores in California. Dagan, he did not break that news when he was sitting on set with us, which you let him know.
Yes.
But I'll give you the first word on what you think about this.
I am happy to see an operator, an owner, come out and say this publicly, because very often they just bury it, or they kowtow to the elected leaders of a municipality, of a state. I mean, you see it with the banks.
They're more regulated though than this guy.
Right, but what do you think of it?
Listen, obviously I agree with him, but I mean, what's good about this is that he's not regulated to the extent that all these other companies are regulated, so they can't really go after the Biden administration. I mean, I think if Jamie Dimon had his druthers during the last 4 years pre-Trump, he would have been out every day saying how horrible the regulatory environment is, how they're screwing up the economy, how inflation was not transitory. By the way, he did some of that, but he did it in a much more sort of diplomatic way. This guy doesn't have to be diplomatic, and I think that's really good. And I mean, listen, how can you deny what he's saying? Gavin Newsom runs a state that's a hellhole. His cities are falling apart. Taxes are all off the wall, and he's a lousy governor.
And I was begging Marcus to reopen the Bed Bath & Beyond on the Upper West Side here, because we're not that far behind California with respect to how things are run and why brick and mortar is closing up. And the communities suffer when they don't have an option sometimes to go to a store. And that's one that I particularly miss, because there are things that I want to order for a bathroom that I need to touch and feel to understand quality and to be able to compare. You can order those things online from bedbathandbeyond.com or from Amazon, and many times you'll end up sending them back. I really miss having that store, but why did stores close here? Because we allow people to steal things, and walk out of the store with goods for free, because we make it hard to do business here. And so maybe this comes back to the Mandami point, which is that we've got to hit rock bottom and suffer. People have to suffer not having access to these things until they get fed up with it and they ask themselves, why don't I have it? Oh, here's why. I need to do something about how I'm voting.
And I just want to point out, Marcus has historically, because he flies over Camping World, very large American flags.
Yes.
And even small towns in places like North Carolina, I say small, they're like small cities, but they will fight him on these flags.
Yeah.
They want to regulate the size of the American flag that he can fly. And he will fight and pay fines, because he will not relent on something he feels like is his right.
Can I just throw something into this too? So this news came out about them not going to California. So of course Gavin Newsom sees this, right? And he has a chance to respond to this.
I see.
Now, how would you like a governor of a state to respond to the fact that a business says it's hard to do business in your state? I think you'd want the governor to say, well, gosh, we'd like to make this a business-friendly state. We're sad to hear you're not going to be here. Our consumers will lose out. Gavin Newsom...
Let me guess. He attacked him. He attacked Marcus.
In such a horrible way.
He says, oh, the company that already went bankrupt and closed every store across the country 2 years ago?
Okay, he's wrong about that.
Okay, and then he follows on with more. After their bankruptcy and closure of every store, like most Americans, we thought Bed Bath & Beyond no longer existed. This is when he has to walk it back, of course, after he realized Lemonis is trying to do a good thing. Luke, the point here is, we talked about this when it comes to, like, are you in New York? Are you in Florida? A sensible politician wants businesses to flourish in his state. Gavin Newsom has failed that test yet again yesterday on this issue.
Let me take it a step further. Let's throw some numbers at this. I think the deficit that the state of California is looking to run this year is about $12 billion. So let's say you were spending $12 billion, and here's someone offering, here's $100 million I have that I want to invest in your state to create jobs, tax revenue, and all that stuff. Why would you ever say no to that? If I had a client come to me and say, I want to invest $100 million, I'd work my butt off to make sure I'm doing the right things to earn that business. I think California is at the point that's becoming uninvestable. Like from an investment philosophy, real estate, all of that fun stuff, it's like China. I always say China's basically uninvestable. California.
Well, think about what a juice this guy is. I mean, when it really sorry to use that word, but that's exactly what Gavin Newsom is. Marcus Lemonis his business did not go out of business. He bought Bed Bath & Beyond, the brand, and
in bankruptcy.
Out of bankruptcy, and he's trying to rebuild his business. He's an entrepreneur, which I guess is very foreign to Mr. Newsom and his slick back hair. He doesn't understand that people actually work for a living. By the way, he's lucky, you know what, times 1,000. So, and then he goes out and then he belittles the guy trying to remake the business. That is a juke.
He was ignorant, then he was mean-spirited, and then he was stupid enough to respond with a stupid response once he found out that he was ignorant.
Say what he is.
And mean.
Say what he is. A juke, right? Say juke.
Charlie, I have no idea what that means, and I am not going to say it.
Yeah, I won't even say it. 'Cause
Make
I don't know.
I just said it. Am I going to get in
No,
trouble?
no, because I'll mispronounce it.
HR.
I'm sorry. Here's what I'm just going to call him a really, really, really bad governor. That's what I'm going to say. Make sure to catch the Big Money Show tomorrow. We'll have